All right, good Tuesday morning, everyone. Happy New Year. We are on the floor of the New York Stock Exchange with Jim Cramer. All right, Jim, it's a new year. We had an incredible run in stocks last year.
And remember, as Bob Lang retweeted, you don't necessarily preclude an up year after a big up year. Actually, the data show the other way. But I think I want to point, everyone should read Ken Fisher's column today. He's one of my faves and a friend in USA Today, talking about how Europe could be better than US. Now, obviously the dollar is very weak, so that's going to affect a lot of the European manufacturers, but I like that call. They had PMI up at 60, and that could mean the raising of rates, which is going to be very good for the banks. So Europe may be better than the US this year, but the US could be strong, and I like the idea that the average has been, after a big rally, up 12% the next year. I think that's certainly doable. I do worry. I don't want to see too much euphoria. I don't want to see too many secondaries, although I think some of these companies should do them. So the secondaries I don't want to see are from NASDAQ. But you know what? If we can get tech going, and tech is the one that really kept us down in the fourth quarter, but was great all year, then we would see another big rally. FANG off to a strong start today, which is important because that group's been kept down by, I think, profit taking. And if that can stay strong, you might have a good day.
Speaking of tech stocks, Apple is now offering those batteries now versus
look, I think that this was one of those things where Apple is a consumer product company. And if Gillette put out razors and somehow their batteries burned out, then Gillette would have instantly give you a new razor. Apple, if you're worried about your battery, instantly you get a new battery. That's what a great consumer products company does, and that's what Apple is. Unfortunately, it's always covered by tech people who simply just keep making surveys that tell you to sell, sell, sell. And I've never seen a survey that ever said buy, buy, buy. Every survey's negative. How's the stock done during Mr. Survey? And the answer is it definitely, I'd say, non-correlative with the endless sell, sell, sell surveys.
And that's one of the reasons why you say you should own Apple, not trade it.
Right. I mean, I saw there was a $200 target from Piper. But don't worry. In the next few weeks, you'll see a lot of downgrades. And you'll see a lot, because people love to do that. They love to make a name by downgrading Apple. I think they should be more thoughtful and actually analyze the world and what it means for the 8 and the 10 in 2018.
And Netflix was upgraded by Macquarie. I mean, where have they been?
Well, I mean, the problem with that is they're talking about how they favor a sub-model versus ad. Well, I think that's one of the reasons why the stock has moved so much. I mean, talking about the company being miles ahead of everybody else, well, I think that's well known. The only thing that I thought was interesting was that they do say that they're not going to break the bank making original content. And that's very important because that's been the bear case. Free cash flow, maybe just okay. The call's probably right.
Yeah, and it also said that Netflix has changed the way people watch TV. I think we knew that.
Worldwide. Yeah, look, I mean, it's like the Abbott Labs. We own Abbott Labs for the Charitable Trust, Action Alert Plus. And two people upgraded it today. I mean, like, we bought it in the 40s. And they upgraded now. Well, the answer is they're just beginning to recognize that St. Jude is going to help this year, that Alere is not going to be that bad. So what they're doing, and this is going to happen for a lot of companies in the next 5 days, they're literally saying 2018 is going to be better than you think. Organic growth in the case of Abbott going to 5.56. Everyone will want Abbott on that because that will be one of the great organic growth stories for 2018 if that's the case.
And Jim, for the new year, marijuana, recreational marijuana.
Yeah, I mean, look, I think that Oregon showed you what it means. Oregon allowed you to do 3 plants hydroponically, and the sales were really fabulous. 11% of Scott's Miracle-Gro is hydroponic, which is often thought to be marijuana because you can grow it inside. We know that we've seen statistics for states that have it recreational, which show that there's tremendous demand. And I know that a lot of people want to play marijuana stocks. I still insist that the best way to do it is Scott's Miracle-Gro.
All right, Jim Cramer, we'll leave it there. There are many more stocks to talk about behind ActionAlertsPlus.com.
Let me just make one more point. This is what you're going to see all year. You're going to see comments like the Disney upgrade today. The Disney upgrade is based on the fact that you should start thinking about the movies, not about ESPN. in the first 5 days, there's always a level of optimism that is just like that. It has been this way, and I remember, because in the 80s, I used to go with my kid, well, 90s, but also in the early 90s, I went with my kids to Disney World every single year. And I always remember this period because you would get upgrade after upgrade after upgrade. It's always going to be a sense that this year's going to be the great year. So be aware, you get 5 days of really unbelievable positives, none of which are really revelatory, but they do tend to work.
And maybe investors stop obsessing over ESPN.
Yeah, I mean, I think that ESPN, one of the things that has really hurt that stock is cord cutting. But now, if you believe in Fox, you got international, where cable is not that. You got India, where cable is certainly not a big deal yet. And this we got to recognize that if a movie can make $1 billion, $1 billion, that's just an incredible business. And I think that people are going to recognize that the movie business with Toy Story 4, with another Star Wars, with Mary Poppins, which I think is going to be $1 billion movie, these are things that people have to start thinking about. And if you put those two together, you do want to own Disney through this slog until the Fox deal closes. And I think the Fox deal will work. Hey, by the way, President tweeting a lot of stuff. Let's remember, President means deregulation, helps oils, helps banks. Banks first out of the chute. We'll see a lower tax rate. We'll hear some tremendous things about growth. Lennar today upgraded because there's too few home builders. Remember, Horton and Pulte were the two home builders. They were two of the best stocks of the top 10 in the S&P. That'll be a piece coming in real money. So I really just want to urge that people recognize there's a lot of buoyancy that happens at the beginning of the year, and I don't like it because there won't be next week.
Well, it's amazing the home builders did so well given the rising rate environment.
I know, and it's unbelievable that Pulte and Horton could be so strong. The textbooks say you should be selling those stocks. I think the shorts are always looking for something to do. And what they did was they went up against these stocks and the commodity plays because China looked muted. But take a look at Freeport. It's up at 18. Take a look at the home builders. They're incredibly strong. So the actual book about what's supposed to happen here for hedge fund managers isn't working. And let's watch Facebook, Amazon, Netflix, and Google, which is Alphabet. They all had a really tepid last few weeks. If they can rally, then the NASDAQ, which was the best performer, can have another leg in the first quarter.
All right, Jim, we're going to continue the conversation, but everyone has to go to actionalertsplus.com to watch us.
We have a lot of stuff going today.
So many.
New stuff.
Yep.
Thank you.
We'll see you there.